So the second compulsory question we've got to do, if we go down to the requirements, we've got to work out this business's adjusting trading profit. Now this is a company, all right? So this is relating to what you've learnt in chapter 16 of your notes. I know we did some adjusted profits in earlier chapters, but remember that was from a sole trader's perspective. So this is for a company. A lot of it is very similar, but there are some slight differences. So we've dealt with an individual in question 1, now we're dealing with a company in question 2, dealing with an adjusted profit, and then we've also got to work out their capital allowances. Now it states here you should commence with a profit before tax figure of 554,720. Look at all the items that are referred to, indicating the use of a zero for anything that does not require adjustment. So if you think it's an allowable expense, you've got to say by showing that you've looked at it that you're not going to adjust for it. Right, so it should be similar to what you've been doing in class. So the first thing we're going to do then is run down the list and see what's allowable and what is disallowable. So we've got the profit to begin with that they've told us to start with, 554,720. And then we've got a list of things that have gone in the accounts and we've got to decide if they're allowable or disallowable. So depreciation, you should all have seen that many times and know that is a disallowable expense. In fact, anything to do with assets is disallowable, buying them, selling them, depreciating them. And then we've got some donations. Donations are to a national charity and a political party. Both of those are disallowable. The only donations that are allowable is if you've got a local charity and you're getting some sort of benefit from them. Normally you get some sort of advertising because you're giving them some money. Other income that you've got some bank interest and you've got some dividends for some shares. Now this is income, all right? Any income that you have other than your main trade, i.e. sales, you're going to disallow because it's not to do with the trade. So the only income you should have is your sales income that forms your gross profit. For your repairs and maintenance, it includes 1,200 for insulating some new plant that you bought during the year. So installation costs are capitalised. Now, I don't know if you remember this from your IS 16. Under IS 16, you capitalise the cost of the asset and anything to get the asset into working order. So things like installation, delivery costs will be capitalised. Anything that's capitalised, you've got to disallow, all right? Because you'll get capital allowances on that or depreciation accordingly, depending on which viewpoint you're looking at. Decorating is allowed, so that's fine. For your gifts and entertaining, we've got some diaries that cost £10 each that we give to our customers with a company logo. Absolutely fine. So as long as it's £50 and it's for your customers or your employees or whatever, as long as it's got some sort of advertising for the company, that's fine. So things like diaries, calendars, pens, that type of thing. However, the wine is not allowable. It doesn't matter that it's under the £50 limit. The fact is it's alcohol. Alcohol, cigarettes and vouchers, we've got to disallow. And finally, the staff Christmas party, that's absolutely fine. Any entertaining for staff is okay, but not for our customers. Last two then, we've got some legal and professional costs. So the first one we've got is a fine. We don't care what the fine is for, we're going to disallow it. The only exception to the rule would be if you're a sole trader, which this isn't, and it was the owner of the business who was paying some speeding fines, and that if they accept that cost, then they parking fines, those types of things. So they would be allowable, but for a big business here, really, if you see any fines, you're going to say it's disallowable. And then the last one we've got then, solicitor fees to do with customer debts. Well, that would be a trade expense, wouldn't it? I mean, a customer's debt is a receivable, and if you're chasing that money, that would just be a normal administration cost of the business. So that would be allowable. So you should be able to run down those expenses fairly quickly. We're not bothered about this bit here yet. That's to do our capital allowances, as is this section. So we're just going to focus on those expenses. So remember what it says here. Start with that profit figure, that 554. and then go through each of these and say whether you're going to allow or disallow. So I'm going to go over to the side here for question 2. I'm going to start with my profit before tax, which was 554,720. And I'm literally just going to run through each one. So we've got depreciation. We've got your national charity. You don't have to use the exact wording in the notes as long as the marker can see where you got your numbers from. And then we've got the political party. So all of those are disallowable. If it's a disallowable expense, we add it, don't we? Because expenses make profit smaller. And if it's disallowable, it means I can't claim it. So I need to add it back. Then in the next section for the repairs, we've got the plant installation. We disallowed, but the repairs were fine. And this is what it says in the question. If you've got something that you're going to allow, and that's what we said, wasn't it, up here, that we're allowing that repair, then you've got to say you're allowing it. So you can either put a dash or a 0 to show, yeah, I've looked at that, but I'm not going to adjust for it. Same for the diaries. Allow. Wine, we need to disallow. And the staff party is another allowable. So it's quite quick to do this once you've established what's allowed and disallowed. And if you learn all the main ones that we've given to you, you should be fine, because we're not going to throw anything completely random that we've never told you about. You know, so you'll always find the most common things appearing again in all these questions if you practice them. So practice really is the key to these adjusted profits. We disallowed the fine, and then the debt collection, we said, was allowable. Okay. Now, we also had a couple of income items, didn't we? So we had here in this note there, we had a couple of income items. So this was the bank interest and the dividends. Now, when you've got income, they are going to be deducted. So if you disallow the income, it's a deduction, isn't it? Because it's in the profit and we want to take it out. And I'll just put here as a little note just to remind you, the reason for doing this is because they're non-trade. Right? If it said it was trade interest, then that's fine, I would have allowed it. But it just said in the question, it just used the words of bank interest received. So I'm just assuming it's like just some interest because I've got some money in an account for the business and I'm just getting some interest. It doesn't really tell you what it's for, whether it's an investment or whatever. Now, the last thing I want to deduct is my capital allowances, but I need to work these out first. So let's go down and do the working here for the capital allowances. So the first thing I want to do is put my brought forward balances in. So we've got a main pool, and then you'll have your special rate pool. For a company, that is all you're going to have, all right? Individuals might have private use assets, but companies don't. I suppose you might have a short life asset, but generally those are the two that you need for a company. So let's go and have a look at what's going on with these capital allowances. So we've got 2 pools brought forward. So that's my opening balances. And then I've got a couple of purchases that I've made during the year. So I just need to decide what pool they're going to go into. So for the first one then, it's some plant. So that's going to go in the main pool. The van is going to be the same. Vans, lorries, just normal commercial vehicles will go in the general pool. But then we've got a car and the emissions are 141. So that's going to be classed as a high emission car, and that's going to go in my special rate pool. So those are going to be the split of my additions. Remember, you get the annual investment allowance on anything other than cars, so you'll get it on the first 2. Now, one thing you might miss here, it says the new plant, see repairs above regarding the installation costs. Now, if you remember up here, we said these installation costs of 1,200 we disallowed because we capitalised them. So because we disallow them when we do the profit, we need to add those installation costs to the cost of the asset. So we're not claiming it against the profit, but what we can have instead is the capital allowances. So we've got to remember to put that in. So if you disallow any capital up here, remember to give it the capital allowances instead of, so they don't lose out completely. So we're going to start with the brought forward figures then. So we've got 38,400 and 10,900. We've got our additions. For your main pool, we've got the van, we've got the plant, and we've got the installation. Now those three items come to 117,300. Now if you remember, your annual investment allowance is a maximum of £1 million. So you're well below that limit, so we can actually write all of that off, can't we? And claim that full annual investment allowance in our total column. So there's nothing to actually put into that pool, is there? Because we've claimed it all in the year of acquisition. However, I can't put the car in there because cars don't get annual investment allowance. So the car is going to go into the special rate pool. We've got no disposals on this question, but if we did, we would deduct the lower of the cost or the proceeds before we worked out the balance. So we've still got the same opening balance in the main pool, and the special rate's now gone up to 33,300. So the final bit is to work out the writing down allowance. So 18% on your general pool, 6,912, carry it across. And work out your closing balance. Always work out the closing balance because there are marks for doing this. So don't forget to subtotal it. And it's your own figure, remember, because if you've done this wrong, then this is going to be different. And then on your special rate pool for the current year, it's 6%, and that gives me 1,998. Carry it across to the total and close it down. Okay. So finally, we want to add up this total column. So you've got your annual investment plus your two lots of writing down allowances, and that gives me the 126,210, which again is marked very much on your own figure. This is the figure we needed to work out, wasn't it? The total allowances. So we're now going to bring this back up here. That's what I want to put in my tax computation. So that's the relief I'm going to get. And then I get my final adjusted trade profit or income, whatever you want to call it, which is 517,690. And you will find it useful if you look at the model answers that are attached to these. So your printed answers, it's got all your marking schemes on there, and it will give you an idea of where your marks are coming from when you're doing this. So that if you know there's going to be marks available, then it means it's important that you actually do that. So I think there were about 11 marks for doing the capital allowances bit, and the other 14 was for doing the adjustments. All right, so that is your fairly common question 2, doing some sort of adjusted tax calculation involving some capital allowances for a company.